Hello, we're about to start Asian trading on the 3rd of July. I hope everyone's doing okay. This is a bit of a weird week, I think, because of the holidays in the United States. But we've got the Fed minutes tomorrow. We've got non-farm payrolls on Friday. We've got the big July 4th holiday in America. In the rest of the world, it's kind of pretty lackluster, difficult markets this week, to be honest. Start of the month, and yeah. What I don't like and what's a bit concerning is what we've seen today is a really nice bullish rally or a really good bullish bounce in stock indexes and absolutely nothing in Bitcoin and crypto, which is a little bit concerning. So a big divergence, normally at least in US trading, if it's risk on, Bitcoin tends to benefit, but that didn't happen today. So let's take a look at what's going on, and we'll take a look at Ripple as well. Lots of questions there. So here in Bitcoin, we rallied back to the daily 20 moving average, which we can see previously in trend moves has been really epic support and resistance. It's a really good trend guide. For me, the daily 20 moving averages and the hourly 20 moving average is like my best friend for trend. And that's where we got rejected today. Now, potentially, this is an equal measured move or an ABC or a three-wave corrective pattern. I'm kind of not that fond of it because it wasn't kind of an equal measured move. I like them to be either like this second swing 61.8 of the first one or equal. It didn't. Maybe it got front run. But what that does mean for Bitcoin is that potentially this is a wave one and a big two-wave correction, and potentially the start of another swing. So this is like wave 1 of 3. So we just like pull halfway back and we turn up here. If we look at these 4-hour moving averages, you can see that we've gotten above them. We've got a bullish cross. We could very nicely find some support here and simply continue higher. So what would be the invalidation for that? Well, this previous low. So we're going to be pretty bearish back underneath 60,000. That's pretty reasonable because 60,000 has been a really strong kind of bull bear line for Bitcoin. So back under 60,000, we're going to see a bigger pullback. And potentially then around here, around 61,000, 61,500, we could see a turn and we continue higher. And what we've done here is wave 1 of 3, and we're going to see a really strong wave higher. The next one way, when I'm really kind of looking at fib levels is I look at a bigger 2-3. Let's go back to the daily moving average. So I look at the big 236 fib for resistance. I think we're above that. So, we could very easily find support then where we are. If we look at where we are in terms of daily candlesticks as well, normally when you have a strong up candle like this, followed by a doji in the middle, it becomes a really bearish three-wave pattern, a evening doji star or a morning doji star, if you look them up. If we close more than 50% down or of the open close of this big green candle, the thrust candle, that makes it that nasty three-wave pattern. And so we can see at the moment that 50% of the open close of that candlestick is here at 61,800. So in spot, Bitcoin's kind of 60. I can't mark it. I'm trying to mark that level on a lower time frame. There we go. Let's take that away. I'll just move that sideways. So 61,800 is really kind of where we want to hold above. And if we have a look here on the hourly, that's where we're kind of making a little double bottom. So potentially we could see a decent move higher from here. And this is kind of a really ideal place on a daily close to hold and to rally from and to look for a bounce from. So again, in between here, I think in between 60,000 and 61,800, 61,500, this is a kind of little no man's land and quite choppy. So potentially we continue higher from here in Bitcoin. I have to say though, all the time that we are underneath this daily 20 moving average, I'm not feeling very bullish. It's not the bullish reversal we want. And I kind of like to see a little bit of a a better bottoming pattern, if you like. This may take a little bit of time. So now, where would we go if we got back underneath 60,000? Well, at the moment, it looks like we're coiling up, doesn't it, in a kind of triangle or a pennant pattern. So if we continue higher, we're going to be looking for the top of this triangle pattern. Because we're in a wave 4, very often you do make kind of 5-wave triangles or wedges. But because I'm always looking at bigger 3-wave corrections, so from this low to high here, you can see here, back underneath 60,000 for me would point to a bigger pullback and an equal measured move target down here at 54,700. And that would mean that this consolidation pattern that we're seeing in Bitcoin doesn't become a triangle and instead becomes a bullish flag, and the support level I would be looking for 54,700. When I look at that level, kind of hard to see any other. I like confluence, if you like, and it's kind of hard to see any other support around there. In fact, we could see a bigger move because that would be also back underneath this weekly 20 moving average. But that's how I'm looking at Bitcoin at the moment. And so 60,000 still becomes key. And this is just, really tricky in a tricky week and not ideal price action so far. If we take a look at Ethereum, this is Ethereum against US dollar. Let's just put regular candles on. We're in this sideways consolidation pattern. What I don't like about Ethereum is how we are holding underneath these daily moving averages getting rejected. It also looks like a 3-wave correction in ETH. If we take a look at this, we could also say we could be wrong and we have pulled back into 4-hour moving averages. And this also is a pretty interesting place for ETH to rally from. Certainly at the moment, ETH does not look better than Bitcoin. It looks worse. And one thing with ETH, it's if we're making a big 3-wave move here and we measure this first high to low, when project it from this top for a measured move correction, then you can see that we haven't quite reached that 61, where this swing is 61.8 of the first swing, which is very common in corrections. It's at 3,184. So if we do continue lower in ETH against the dollar, 3,184 is the level I'm looking for. If we take a look at ETH and Bitcoin, ETH against Bitcoin, sorry, we should be able to see, here we can see a pretty tricky resistance in ETH against Bitcoin, because we're looking for that sign that should we be buying ETH instead of Bitcoin? Are we going to break higher here? We're held down. You can see every time since we rallied from over a year ago, so since we got underneath this weekly 50 moving average back at the start of 2023, every time we've rallied, that's where we've gotten rejected. We got rejected there in June 2023, a year ago. We got rejected there when we tried in February, and we got rejected there where we tried in May. And so here we are just testing sideways at this weekly 50 moving average. If we were to break out and close above this, this also would be for me the sign that we've begun the next swing or the next leg higher in Ethereum against Bitcoin. Until then, really, we're kind of in a choppy sideways correction in Ethereum against Bitcoin as well. And I'm gonna, it's gonna be one of those, high tide floats all boats in this one. Let's take a look at a few more. I'm getting a lot of questions about, because Ripple is in the news quite a bit at the moment, and what's going on with Ripple. Are we going to bottom soon? Will they get this lawsuit and legal issues with the SEC resolved? I have to say, I don't think the SEC's war on crypto continues. It doesn't, I keep hearing that crypto might be an election issue and that Biden might soften his stance. But at the moment, Gary Gensler is still, all guns blazing. Ripple have been offered, I think, a $2 billion settlement with the SEC, and they are trying to reduce it. They've been in a legal fight since 2020. Once this is resolved, of course, everyone's anticipating a decent rally in Ripple. And you can see from this monthly, really, we've been stuck in a really nasty monthly range. I kind of like the chart of Ripple against Bitcoin, and I'll talk about that in a minute. But in this one, yeah, are we trying to make a little bit of a bottom here? Potentially. I don't see it against the dollar. I'm quite excited, a bit more excited about Ripple when I look at it against Bitcoin, and you know, it should be maybe be taking a look at this one. Let's take a look at this chart, see what I mean. So when I look at the daily chart here, first of all, actually we should zoom out and look at this weekly. So we're at a pretty interesting level. We made a double bottom swing failure pattern here, Ripple against Bitcoin, which is a pretty good bottoming pattern. If we look at this on the daily, so we've got this level that we tested, which was here at 682. Remember Sats, remember this is Ripple against Bitcoin, and this is looking like a nice rounded retest or an inverted head and shoulders pattern where we have this swing failure. What I like about this as well on the daily is we've gotten above these daily moving averages, and it looks like we pulled in back into them with a really nice three-wave correction. So we can say that the neckline of this bottoming pattern here is kind of around 795, and if we break above that and Ripple against Bitcoin, we're likely to go, because this is double bottom pattern, we're likely to go to the top of this sideways range, which is 897, and then that of course would put us at the weekly 20 moving average, and then above there we have got a bottom, and we are going to see Ripple outperform Bitcoin for a bit. But at the moment, yeah, that's right at the resistance, and I'm watching to see if it does. And again, this is one where there really is some invent risk, you know, with everything that's going on. I think that when it is resolved and they do reach a financial settlement, that Ripple will start to see some bids, and I know that they're also working on a stable coin, so we'll see how that goes. So yeah, Ripple against Bitcoin does look quite interesting. Let's see. So the other thing exciting going on has been, I think, in meme coins. What's going on in meme coins? And let's take a look at the biggest one of those, which of course is WIF, dog with hat. I got quite excited here because we got above this daily 20 moving average yesterday, and it needed to hold above it if we're going to keep going higher. The problem is it's also a pretty tough level of resistance for a couple of reasons. So if we do that measured move thing for these corrections, so if I measure from this high to this low and project it from this high, this is back testing that 61.8 level, which you can see is also pretty cool support and resistance level at 2.28. And when you back test it, if you're going to keep going down to the equal measured move, it becomes resistance. It becomes a really, if you lose the support from it, which we did here, it becomes a really interesting support and resistance level. So at the moment, we've reversed at a key resistance level, and we need to get back above 2.28 for the bottom to be in, or we are going to continue down lower to 1.168. The other reason I think it is, so when I normally, you know, I put fib retrace levels on the most recent swings, which puts us in a pretty nice bullish condition above this 2 level, which is the 236 fib. However, when you think you've made a three-wave correction, or I put the fib retrace levels on the whole swing, and the key level to get above becomes the 236 fib of the whole swing, and that's also this resistance here again, which lines up with these previous swing lows. I'll go from this one. So key resistance and potentially, so we've got a pretty tight range here, haven't we, between support and resistance. If we're going to keep going higher, we should hold the neckline of this head and shoulders pattern that we made in WIF, and we should continue higher, and we shouldn't really get back in it. You know, these necklines should be pretty strong. And so I'm waiting to see, are we going to hold above, because if we hold above 2.28, we should see a lot more upside in WIF. So not clear which way we're going to go, but a breakout of this narrow little range that we're in should tell us. What about some of the other meme coins? So if we take a look at Doge, this again looks like, wow, what great what a great level. The weekly 200 moving average should be a great place to bounce from, right? But again, because these corrections have usually measured relationships, so we've done a very nice three-wave rally in the middle here. So this first swing, projected from here, we haven't quite reached that 61.8 level, which is a little bit frustrating. And this at 0.107 is also a really kind of nice support and resistance level, this previous high, and also where the weekly 50 is. So what's going on here? When I look at this on the daily, so we've got support from the weekly 200 and we've got resistance from the daily 200, and so that's our very narrow range that we need to break out of. And I have to say, in Doge, unless we can break out above and close and hold above 0.129, we are likely to continue lower to 0.107, and the bottom isn't quite in yet, although it looks like we are building potentially a very nice base here. So that's what I'm looking for in Doge. I think more upside if we can close above 0.13. Otherwise, 0.107 is where the next really good support for me comes in Doge. And so the only other one I've been trading, this is Kai that I have been looking at. And what I like about this one, clearly we've been building a pretty good base since middle of June. And on the 4-hour for me, we've been in this. So here was our first swing higher. Here's this very clearly choppy overlapping correction in this channel. And I kind of like how we're breaking out from this channel. We're breaking above the 4-hour 50 moving average. So first target, whenever I see a trade like this, it's going to be the top of this sideways range, which is kind of a little bit of a neckline here, isn't it? And then the bigger sideways range here, which is around 0.61, and that 200 moving average next. And then again, in Kai, if we can get up there, I think the 236 fib from the bigger all the way back from the highs comes into play next at 0.74, and above that we can clearly say we bottomed, and this whole nasty correction that we have been in since April should see more upside from that. So let's take a look at a few more, not just Doge. This is what this for me is not such a good looking pattern. So this is Dog, not Doge. 3-wave correction, pretty bullish, but are we going up again yet? We've just double topped, and whenever you double top like this, doesn't mean you're going down, but it does mean you've stopped going up, and that's kind of what's happening here. So pretty nasty sideways range, not quite going up yet in this one, potentially still building a base, or potentially not a bottom yet for Dog. So the other one I've been watching has been pretty decent bullish moves is Solana. Let's take a look at regular candles. Well, this is a weekly chart of Solana. Now this is kind of coiling up a little bit, isn't it? Because we didn't really make a new low, so potentially we could, big picture, if this is a wave 1, 2, which is very nice and simple 3-wave correction, and then we've got a lovely 5-wave wave 3, that means that we're in a kind of wave 4 scenario, just like Bitcoin. And very often in wave 4 you end up with wedges or triangles. So we need to watch out for that in Solana. What does that mean? That means we could draw it like this at the moment, and we could say, oh well, that trend line high is our first target, and we could be breaking out of it here if we break above it and we're in a new big swing higher. But I would say watch out, because quite often you draw these triangles and they can end up being broader. You don't make a new high, and if they fail, like if you break out, so if you could draw it like this and say, okay, we're breaking out, but if you fail, it's because it's a measured move. So you measure from this low to this high, project it from here, and then that measured move at 192 level becomes the key level you could get above, because you could end up making a broader one. But at the moment, clearly we've got our daily moving averages the wrong way round, and we're only going up if we get above this daily 50. But I kind of like the look of this. If I look at it on a lower time frame, we could argue here that it's not textbook, because the left shoulder is a little bit smaller, but it does look pretty bullish, and we've flipped now these 4-hour moving averages. So Solana is looking pretty good. Hopefully that could help some of these meme coins, but just watch out for this resistance at the daily 50 moving average, and it's always a tricky place. A 50% retrace is always a tricky level from any swing, and that lines up with where this daily 50 moving average is. So if we're going to fail in Solana, it's going to be at this 155 level. Above 155, then we are cooking with gas, and we're on our way back to the top of this bigger wave pattern in Solana. Buy pullbacks on lower time frames. Don't buy breakouts in these. Honestly, it will get you run over. A big level like this, what would be really kind of nice and bullish would be some sideways price action here, either above it or below it. So if we get above it, we back test it, then you can buy it. Or we could see some sideways shallow corrective price action, then we break above it, and then you have a pretty nice tight stop if we see something like that. But this is the key level for Solana at 155. Okay, hope that helps. If there's anything you're looking at, let me know. There's quite a few I've got on my list that I keep looking at and saying, are we going up? One of them, for example, for me was AVAX. I was looking at this bounce here back above the weekly 50 moving average. You don't normally do that. It was pretty bullish. But when I put fib retrace levels on from this low to this high, I see that each one of these fib retrace levels got a really strong reaction. In fact, you can see it better on the daily here. This 236 fib was a really strong reaction. 38.2 was. 61.8 here was 50%, in the middle was a bit messy, and so this 61.8 level in AVAX becomes a really important resistance level that we need to recover, because if we don't, we're going to continue lower down to this 786 fib level, retrace level next, which is at 20.8. So unless we get above 30.37, if we roll over with a bearish reversal here, this is the next support target, if you like. So haven't jumped back in yet. If we get down to a 4-hour, we can see this kind of lines up perfectly also with the 4-hour 50 moving average in these previous swing lows. So above that, we can say quite confidently there's probably a bigger bottom or a bigger bounce coming. 37 and 43 next for Solana, for AVAX, and I've still got a little bag of this one. So good luck. Let me know if there's anything you'd like me to have a look at or explain.